After understanding the basics of Forex and why trade Forex, next, we must understand who the players are in this massive financial market. In this video, we will show you the 6 major movers and shakers in Forex. The first, of course, are the central banks. The currency of a country moves according to policies issued by the central bank. The central bank most eagerly watched by investors is the Federal Reserve in the United States, commonly referred to as the Fed. Any economic policy announcements or interest rates adjustments by the Fed usually causes movements across markets. Other central banks that are closely monitored include the European Central Bank, the Bank of England, the Bank of Japan, the Bank of Canada, and the Reserve Banks of Australia and New Zealand. Second, apart from the central banks, Forex is heavily traded by commercial and investment banks. Believe it or not, it is actually these banks that carry out the largest volume of transactions against several currencies selling on the interbank market. These banks trade currencies with each other via electronic networks. Next up, multinational companies. Usually, companies engaged in imports and exports will trade foreign exchange to pay for the goods and services they transact. They also conduct Forex transactions to hedge the risks associated with foreign currency fluctuations. When these companies hedge against currencies, it adds a level of security when they plan to invest overseas. The fourth kind of participant in Forex are investment managers and hedge funds. Apart from banks, they are the largest pool of players in this market. Investment managers usually conduct foreign exchange when handling large accounts such as pension funds and endowments. And because their trades are international, when they transact foreign securities, they also need to transact currencies. Some investment managers and hedge funds also perform speculative Forex trading as part of their investment strategies. Next, we have individual investors. Anyone can invest in the Forex market through a broker, bank, or trading platform, after conducting fundamental and technical research. Although the volume of Forex trading carried out by retail investors is very low compared to financial institutions and corporations, its popularity is growing rapidly. Last of all, you and I are also participants on the foreign exchange market. When we travel to another country and exchange our currency for theirs, or when we buy something from an overseas online shop, we're all adding to the trade volume in the Forex market. So, to recap, there are 6 kinds of contributors moving the Forex market: the central banks, the commercial and investment banks, multinational companies, investment managers and hedge funds, individual investors, and you. We hope you now have a better understanding of participants in the Forex space. In the next video, we will tell you all about jargons frequently used in Forex. See you there!